we can start. So, dear ladies and gentlemen, I'm very excited to greet you today at the online Unicorn Battle Singapore. My name is Lena Evtushenko and I'm head of Startup Battle Asia. Also, let me introduce my colleague, Anna Fedorova, Chief Partnership Officer at Startup Network and CEO at Unicorn Cup. Anna?
Yes, Lena, thank you very much. Does anyone see my screen?
Yes.
Okay.
Yeah.
Great.
Yes.
That's great. Welcome to the Unicorn Battle in Singapore. That is happening thanks to our sponsors. Network VC is our global platinum sponsor, and ICU is our great friends who are our global golden sponsor. ICU Ventures is a Kiev-based venture capital fund that invests in technology companies with strong ties to Ukraine and Eastern Europe, making late seed and Series A investments across the tech spectrum. ICU Ventures is a part of an ICU group, an independent asset management firm founded in 2006 by senior investment professionals from ING. It's one of the largest and most diversified asset managers in the CEE region. And our silver sponsor is Silicon Valley Syndicate Club. And I would like to stress that the winner of today's battle would be going with us to the Silicon Valley for the Summer Cup that will be happening hopefully in July 30th in United States of America. We have been doing our preliminary battles in 50 major cities of the world. 25 countries, and we are expecting a really big crowd down there with us in the Silicon Valley. So everybody is welcome to join us. And of course, we would love to see you as our partner or as our sponsor at this great gathering. And I would like to tell you a little bit about our company. We are an ecosystem that consists of various online solutions where everyone can benefit. Startups can grow into businesses together with our platforms. The investors can find startups to invest in, and professionals can be our partners in various parts of our businesses. Corporations can seek and implement innovations together with us. The core company that started all this is Startup Network itself. It's a marketplace for startups and investors. We have almost 200,000 of registered users, and the unique users on our platform had reached 1 million users last year. And we have amounted 30,000 startups in our database, and every month we have 1,000 startups more. One of the oldest parts of our ecosystem is Unicorn Battles. And Unicorn Battles is a great opportunity for everyone, for startups. They can pitch live and find investors. The investors can get an access, especially now when our battles are online. They can get an access to great deals throughout the world. And our partners can really grow global together with us. This is the map of our Unicorn Battles, and you can see that we almost conquered the whole world with our peaceful battles. If you would like to bring our battles to your city or to your country, please contact me, contact our girls, and I would love to talk to you about this, because our plans to expand to 100 cities in the nearest future. We started our battles 11 years ago. Right now we have exceeded more than 200 battles, and we do them in 20 countries. And we have regular contests in Europe and United States, 12 contests we are doing annually in Silicon Valley, where our headquarters are. And we do battles offline, and now we are doing them online everywhere in the world. One of the recent parts of our family is Silicon Finance. It's a pre-acceleration program for the startups that want to relocate to United States. We grant them funds worth $50,000 in funds and services, and help them to apply to top American accelerators. One of our recent part is also Network VC California Seed Fund that has two current strategies. First one is to participate as an investor in our pre-acceleration program for the chosen startups. And the second one, to be a lead investor in our Silicon Valley Syndicate Fund. And it's a great opportunity for startups to get a direct financing from our VC fund and for investors to get the big opportunities by investing together with us in future unicorns. And Silicon Valley Syndicate Club is a special entity for private investors. It's a California seed fund that allows private investors to, with a little check of starting from $10,000 to follow us in a round when they lead. And now every investor is able to get an access to the best startups that we had found through our global network. Everybody is very welcome to join us. It's also a great opportunity for partners, because partners in every region can lead our chapter. And we would like to talk about this also more if you're interested. And now I would like to introduce my colleague, Natalie. Are you with us? Who will introduce you to one of our recent entities that has a special interest to the VCs. Natalie.
Thank you, Anna. Hello, everybody. Glad to see you here today. I'd like to introduce you our new project, VC House. This is online community at network created exclusively for VCs, where they can exchange deals they participate in as lead investors. And what is more, it is also a platform for specialized offline events where VCs can find investors for their funds. So I invite you to join us at VC House. And now I would like to return a floor to the extraordinary girls, Lena and Kate, who are hosts for today's event. They will lead you through our unicorn battle in a wonderful city of Singapore. Ladies.
Hello, Natalie. Thank you for the introduction. First of all, I would like to say many thanks to our reliable friends, to our community partners. First of all, to Silicon Finance team, dear startups, pay your attention. This program really help you to reach investors from United States if you aim for it. To level 3 from Singapore. I hope that our next events will be held online and will be held in your fantastic spaces. Also to Startup Around for your great articles. I really recommend you to check their site, and also thank you for spreading the information among your wide startups community. And I want to say to Dana Group, represented by Ruchi Dana, who supports our events around the globe, and also to Falcon Crest Limited, Leathercan, and Commerce Asia for your great support. So how are we going to move on? Now each judge will say a few words about him or herself. After that, we will start the hottest part of our today's evening or date. Depends on your time zone. It will be a pitch session of top 10 startups from Asia. So please sit back, relax, and stay with us until the networking part, where we will hear some VC insights and can discuss the results of the event, which I hope, no, I'm sure that it will be unexpected as always. At our battles, maybe not so bright as our offline events, but I hope that this trial shows you that unicorn battles are worth your attention and you become our regular guest. So I pass the word to Lena and wish you a pleasant evening or day.
Thank you so much, Kate. Thank you so much, colleagues. And so before we'll start the pitch competition, please greet our honored judges who volunteered their valuable time to our event today. Dear judges, please introduce yourselves and your funds for 1 minute, pointing out the industry, check size, state, and geographical location of startups you invest in. So let's start, and who want to be the first one? Hi, dear judges, are you with us?
Okay, Elena, probably I will start.
Yes, please, Alexander, welcome.
Okay, hello everybody, thanks for coming for Unicorn Battle in Singapore. I'm really glad that so many people come today to support startup. And shortly about our fund, we are industry agnostic. Our average check is usually 50 to 250K. And geographically, we usually invest in USA-based or European startups.
Thank you so much, Alexander. So, next one, please.
I'm happy to go next.
Yes, please, Selena.
Hi, so my name is Celine. I'm based in Singapore. I'm both a mentor and an angel investor, and I've spent most of my career in the larger tech companies. As a mentor, I work with pre-seed startups to get them investment ready. So from validating their product market fit, helping them with their business model, their financials, their MVP, their pitch deck, and help them to find the early stage investors. As an investor myself, I'm industry agnostic, and I look for startups that are solving unique problems anywhere in Asia. My sweet spot is around 100,000 to 250,000. I look forward to today's competition, and I would like to thank you, Startup Network, for giving me this opportunity to be a judge. Thank you so much.
Thank you so much, and welcome again. So, next one, please.
Okay, if I could start, this is Eric from Singapore. We run two companies. We have a holding company, which basically is an investment management firm. We also have a Monetary Authority of Singapore registered fund management firm, licensed, and we are into the private equity space. We largely invest into the theme of digital economy. In terms of sectors, we're agnostic. We do invest basically up to possibly Series B fundraising. Venture cap, the startups are within our radar as well. Our investment size, because we are a PE fund, we are looking at maximum of about 5 million in each tranche, but subject to, depending on the disbursement requirements of the investee. All right, so yeah, so happy to meet everyone here. All right, thank you.
Thank you so much, and welcome again. So next one, please.
Do not be shy.
I can go next, Anna. Hi, my name is Roman Nikitov, and I come from ICU Ventures. Happy to be, part of sponsors of startup networks. I think these guys are doing great job uniting, the continents around. So ICU Ventures is a late seed round A fund that we are focused mainly on the companies that originate from Central and Eastern Europe. We invested from 200 to 1 million into one company. And we try to keep about 30% of our portfolio opportunistic and open to the stories around the globe. So that's why I'm here. I'm very excited to hear the stories coming from Singapore.
Thank you so much, Roman. Welcome. Next one, please.
Hi, Elena. Please go ahead, Sunny.
Yes, Sunny.
So should I go next?
Yes, please.
Hello everyone, and welcome. So my name is Sunny Mohanji. I am a token a top 20 cryptocurrency exchange based in Singapore. I'm the regional director. My responsibility, I'm responsible for finding great startups and helping them to achieve their full potential by fundraising, asset tokenization, exchange listing, and post-listing performance. Thrilled to meet you all judges face to face. I live in Singapore. I've been living here for the last 8 years. So basically, with regards to Lachak and the company I represent, we successfully completed an ICO in 2017 where we raised about 18 million in an ICO. So Since then, we have grown to be top 10% of the digital exchanges by liquidity in the world. And we have completed over 150 plus initial exchange offering, which is the fundraising platform that we have. And I'm looking forward to meet some great startups today, and thanks for having me.
Thank you so much. Thank you and welcome. So the next one, please.
I'll try again.
Yes.
Joseph McKenna here. I'm managing partner of Verge Health Tech Fund. Thanks so much for having me here again and looking forward to the competition. So we're a seed stage only venture capital fund that invests globally in technological solutions that expand access, quality, and efficiency to healthcare, specifically in emerging markets. All right, looking forward to this.
Thank you so much. Thank you. Next one, please.
Hello, everybody. This is Pankaj Gupta from Venture Partners. Thanks a lot for having me here today. We are a deep tech accelerator based out of Singapore. We have 18 deep tech startups in a portfolio. Most of them are AI, ML, blockchain, IoT, robotics, AR, VR startups from North America, Europe, and Russia. We do run two different kind of accelerator programs. One is for late stage deep tech startups that have done meaningful business in their primary market and now want to expand into the ASEAN. So we are generally looking for late seed, bridge, or Series A, Series B kind of startups for that program. And the second program is for the solo co-founders, where they may have, where they may come with or without idea, with or without team. And we invest anywhere from 50K to 200K, depending on the size, sector, stage of the startup. And happy to be here and looking forward to hearing some great pitches today. Thank you.
Thank you. Thank you so much. Welcome. So next one.
Hi, I'm Dr. Ruchi Dana. I'm a doctor and a Stanford MD. I represent Dana Family Office. Dana Group is delighted to be a partner of Unicorn.Events Singapore. We invest mainly in early stage and pre-IPO deals. In seed stage, we invest around 100 to 250K. I'm logged in here from Dubai, and I was recently featured by Forbes Middle East as top power businesswoman 2020. I'm looking forward to this. Thank you.
Thank you so much. Welcome. So next one, please. Judges, don't be shy, please. We are waiting for you.
I'm happy to go next. Hello, everyone, and thank you again to the Startup Network for hosting this event. I'm very excited to be a part of it. I'm Jake Booker. I represent Investable. We're an early stage technology venture investor headquartered out of Australia, but also with a team based in Singapore, and very much with a global remit and presence. What we look for at the highest level are great opportunities led by great founders. We're a bottom-up investor in almost every respect and are largely agnostic to model, industry, geography, etc. In the first instance, we deploy between 200 and 500,000 Sing. We run a hybrid model in which a traditional venture fund leads our deals, which we have discretion over, and we also have a complementary club that can choose to co-invest alongside our fund. And we also have a pre-seed programs division to tag and support exceptional founders as well. Looking forward to this event and meeting the pitching startups today.
Great, thank you so much. Next one, please.
Hi.
Yeah.
Again. Yeah. Hi everyone. My name is Janet. I'm from Venture Capital Network from Singapore. Our core business is into listing and investment advisory. We are also into M&A deals and also VC accelerator. So we represent a small group of investors here in Singapore to help them source for promising deals and also investment opportunity. So on the other hand, we also selectively pick up some startup, a suitable startup to help them to scale up the business and into fundraising and also going to market channels by partnering them, and we take a percentage of the business equity as an advisor. Yeah, this is what we are doing here. Yeah, thank you.
Yeah, thank you so much and welcome again. Next one, please.
Okay. Good afternoon, everyone. I'm Captain Cole. I actually am an exponential entrepreneur, an investor, and an innovator. I'm plugged into investment, VC investment. Our fund is now Summit Capital. This fund under our management is $300 million. It comes from the Middle East, from the UAE sovereign fund, and we manage the fund out of Shenzhen in China. We invest in AI, IoT, blockchain, and also in the sense of human intelligence. It's a growth fund, so we're looking to funding in the in the Asian region, especially in ASEAN. And our ticket size is $5 million to $30 million US dollars. Thank you very much.
Thank you so much. Thank you. Welcome. Next one, please.
This is Victoria Marong from Expert Dojo. We are the biggest international accelerator fund based in Southern California. We are industry agnostic. Our check size is 100K for 7%, and we are actively investing, and that's why I'm in different time zones and attending all the unicorn battles, and glad to meet you all, and I look forward to meeting a good startup today as well.
Thank you, Victoria. Thank you. Welcome. So next one, please.
Hi, this is
my name is
Annie, maybe you can go.
Sure. Thank you, Paulina. My name is Ann Kim. I'm from Alpha Beta Capital. We work with companies primarily in healthcare, education, fintech, and we are based in Singapore and Korea, although we work with companies all across Asia and Southeast Asia. So I look forward to hearing all the incubator unicorns and unicorns to be.
Great, thank you so much. Welcome. So next one, Paulina.
Yes. So hi, this is Paulina from Expara Venture Capital Fund, headquartered in Singapore. We invest mainly in Southeast Asia, but accelerate startups from all around the world. Currently, I have the pleasure to manage Expara Virtech, our new acceleration program dedicated to startups creating solutions for a post-pandemic world. I'm very happy and looking forward for the battle.
Thank you so much. Thank you for the introduction. Welcome. So next one, please.
Maybe I can go next. Hi, everybody. My name is Lisa Salud. It's a great pleasure to be with you here today at Startup Battle. Thank you for the invitation. I run an early stage investment firm called R3I Ventures. We have a portfolio of 13 early stage deep tech and medtech companies that we're scaling internationally. We also have the House of Medtech that has just been forged in Luxembourg, and a House of Deep Tech accelerating high growth deep tech companies out of Asia into Luxembourg for accelerated scale across Europe. I'm the entrepreneur in residence for the Canadian government and also the mentor at the Australian Landing Pad and the deep tech coach at IoT Tribe, where we have a cohort of around 11 companies this term, and also a mentor down at Global Launch in 500, working with the best early stage deep tech founders in the region. Great to be with you.
Thank you so much. Thank you. So next one, please.
Yeah, I can go next. My name is Pierre Martinsson. Thank you for inviting me to this event. I wear two hats today. Number one, I'm part of founding Antler, which is an early stage VC, invest and build startup from day one, starting with the founder. And I'm launching the company called Scale Factory these days. We work and support companies scale when they are a bit late to stage, and our check size is around 100 US. And I'm super happy to get to know you guys, and looking forward to a great event. Thank you.
Great, thank you so much and welcome. So next one, please.
Hi, my name is Amit Sharma. I'm from Singapore. I've been living here for the last 12 years now. I've been investing in my individual capacity as an angel investor for over the last 4 years. I've invested in about 5 startups or local startups in Singapore. This year, early 2020, we have started working on creating a fund, and the focus of the fund is essentially around B2B startups. And this is basically leveraging towards the relationships which I built over the years on the enterprise side. So anything which is in the digital service economy space, anything which adds to the productivity, efficiency of a large enterprise, that's one area of focus for us. Now, there are two segments that we're targeting. One is the seed category startups, where we can look at B2C as well as B2B. But for the growth stage, the focus is purely on the B2B side. Yeah, thank you, and pleasure to be here.
Thank you and welcome. So next, please.
Yeah, hi, I'm Ian. I'm been in Singapore for the past 30 years. So I'm born and raised here. I'm a bit different from the rest that have introduced themselves. So I'm actually in the startup space. I started a business about 8 years ago in the education space. So we do youth entrepreneurial education. And we have our own fund to invest in the startups that come up from our programs. So we have a mentorship network as well as a venture builder fund that we help to support some of the early stage startups. So they are really, really early stage. So generally students from age 14 all the way to 24. We run programs across schools in Asia. So we have presence across Southeast Asia, Japan, Korea, and a few other major cities in Asia. And we generally sell our programs to schools. So we help schools create their incubation and their acceleration arm. Thereafter, I went on to start another business in the technology space, in the hotel space. And prior to that, I was in capital for a while. So thank you for having me. I guess I just bring a different perspective than the rest of you who are investors out here.
Thank you for being with us today. So next one, please, guys.
Hi, guys. Hi, everyone. I guess I'll introduce myself. So I'm Jay from Singapore as well. I am leading the ventures team for Plug and Play in Singapore. So Plug and Play is basically a global startup accelerator as well as a corporate innovation platform and a VC as well. So we invest in early stage startups and our ticket size is typically 100 to 200,000 US dollars. We usually help startups to sort of connect with our corporate network, which is about 400 plus corporate partners globally right now. And happy to see some familiar faces here, and thanks for inviting.
Thank you so much. Thank you for being with us today, and welcome. And so who want to be the next?
Hello, everyone.
Hi, can I go ahead?
Yes, please. Yes.
All right, yeah. Happy to be here, everyone. I'm Miguel Encarnacion, managing Unifier Ventures, headquartered in Germany. We're investing primarily in European technologies that we can bring back to Southeast Asia. We're investing early stage, industry agnostic, tickets between 50 to 250,000. But coming from the Philippines originally, we also have allocated a portion of our fund for Southeast Asian startups. And that's why I'm happy to see some interesting stuff being developed in Singapore. Thank you.
Thank you so much and welcome. So next one, please.
Hello, everyone. Can you hear me?
Hello. Hello. Yeah, welcome.
Yeah. So let me represent myself. My name is Evgeny. I speak on behalf of Positive Dialogue Management Company and IXD Capital. So the mission of the Positive Dialogue Management Company is to promote a positive international dialogue based on global partnership between countries. We are doing GR activities. And IXD Capital is an impact investment evangelist, venture builder. So it's combining private capital and innovations that promote the development of the impact sector in Russia and the CIS countries. So we act in close cooperation with international partners, large international organizations and transnational corporations on the topic of sustainable development and implementation of the Global 2030 Agenda. I'm looking forward to a quant here with future unicorns, and I wish good luck to all participants. Thank you.
Thank you so much. Welcome. So next one, please. Yes, please, dear judges. Okay. So I think
Wait a second. I was waiting for the last person because I was the last to join the call. Sorry. My name is Juliet Casco. I'm based in Singapore. I'm a founder of Global CXO. It's a company which works with growing technology-focused companies. I provide advisory on HR and talent strategy for them to ensure they are growing. And I also work as an advisor for Lunix VC, which is a blockchain investment arm of Golden Gate Ventures. We do early stage blockchain companies investments together with SG Innovate. Thank you.
Thank you so much. Thank you. Welcome. So next one, please. I think that's all. Am I right? Okay, so let's continue, guys. And dear judges.
Sorry, I've just come, so I'm like, this is Michael Blakey here.
Yes,
I'm a managing partner of Cocoon Capital, which is an early stage seed fund in Southeast Asia. We invest in deep tech and enterprise tech companies across the region.
And
thank you so much. Yes,
Michael,
please. Yes,
and
please.
JF, I was waiting for the last as well. Board of Innovation, we are the other hand of the funnel. We're helping corporations acquire startup or develop them from within. So all about open innovation, venture building on the corporate side, at the other end of the investment development funnel.
Thank you so much. Thank you. So that's all. Anybody else? Dear judges? Okay, so let's continue. Dear judges, please pay attention that every one of you had received a personal link in mail for evaluation of the startups while they pitch today. Please use your link to access the event page and put marks from 1 to 5 for each of the startups you hear today. If you need some help, please let me know about it in chat. Dear attendees, this information, important information for you. You have a great opportunity to support our participants. For it, you can just register at event page and give your like to your favorite startups. And it's important to know that our participants today need your support. Also, based on the results of the judges for online voting today, one startup will be chosen as a winner of Unicorn Battle. So please welcome our startups. We have 10 participants today. Dear judges, to start voting, you have just to click the link you have got on mail to get access to the profiles of today's startups. And you have to put marks depending on investment potential from 1 to 5, where 5 is the highest mark and 1 is the lowest. You have just put marks without any confirmation buttons. You could also important to know that you could change the marks before the voting will be closed, and I will know about it. So guys, that's all from my side at this moment, and I think we can start.
Sorry, can I ask a quick question? I've got a slight conflict here. Is one of these companies is my portfolio companies? So is it best just for me not to vote on that one?
Yeah, it's better not to vote.
Okay.
Okay. So I will leave one, which is I will not be voting.
It's not a problem.
Okay, cool.
Thank you so much. So Kate, please introduce our first participants for today.
Makoto will start and present his project, Credify Limited. Makoto, are you with us?
Yes, Makoto with us. I saw him. Makoto?
Do not miss your
Sorry
moment
about that.
of
I lost the screen there. Okay, we're back. Yeah, I was doing something. Okay, so I'll share now my screen. There we go. And I will set up the timer so that I can stick to the 3-minute limitation and go full screen. Can you guys see this?
Yeah.
Okay, perfect. So I'll start now.
Good luck.
Okay, so we're Credify. We're a venture-backed startup focused on elevating trust in e-commerce and digital finance. Globally, there's a trend for businesses essentially to monetize and utilize their data. And there's a growing trend with regards to the type of analytics that are being performed on this data to help better facilitate business in the way that we engage with customers and the way that we engage with our partners. Essentially, the main utilization of these things is through to generate new revenue sources, to develop new services, as well to create better insights into the customers that they engage with. But the problem with this is that there's a growing distrust in the world as to how their people's data is being used. I think recently Facebook is the biggest example that we can reference to say that there was a massive data leak and people are growing very wary of how their data is being used, even though it's being largely monetized. And Facebook can be viewed as one of the largest data monetization platforms in the world. And we also live in this world of ecosystems. So there's this trend to where single companies are generating more and more information on users But the issue with this is that these pieces of data essentially are fragmented across platforms, and there's no way really to easily port those across because you face essentially problems with regards to legal problems as well as just logistics problems in the technology side. But what if we could actually take this information and get a more holistic view of a user, but in a way that is completely cognizant and aware of how that user and their perception of how their data is being used. Essentially, there's huge benefits to this, because if we can do this, we can offer better services, and we can use sort of a one passport mechanism into getting into different services, which benefits all users greatly. And so what we have are two services that we're developing. Credify IDX is essentially a data passporting technology that puts the user in control. It's a blockchain-based technology. Essentially, it's self-sovereign, so that the user has full control over their own information and gives them sort of the universal access to services. The IDX system is very simple. The user will log in. Essentially, they will permission and connect in various bits of information about themselves, and then they will give permission essentially to have access to that through the consuming services. And obviously, what this does is it generates new revenue opportunities and new customer opportunities for businesses, because they have a better, more holistic view on their client base. And here's an example of one company they have 5 million users and essentially monetizing at a $3 million rate. And ServiceX, essentially built on IDX, is a way for businesses to essentially share information amongst themselves, but also onboard users. Our business model is very simple. We have essentially a platform solution and white label solution, where in our essentially monetization model is based on 20% commission on transactions through the system, but we also have sort of pilot.
Thank you, Makoto.
Okay,
3 minutes over. Thank you.
Thank you.
You were close to finish right on time.
Yep. I was.
So let's start. Judges, your questions.
Makoto, can you tell a little bit more, please, about your traction for today?
Yeah, sure. We are a Singaporean-based entity, but we have operations in Vietnam and Japan. I'm actually Japanese by nationality, and we have first customer traction in Japan. And we were actually selected by Plug and Play Japan to participate in their fintech program. And through that, of course, we've been exposed to a lot of the large, multinational fintech organizations there, as well as some other opportunities that they've been connecting us to in Southeast Asia. In Vietnam, we're really focused on consumer finance. We're focused on insurance companies and the likes. And so we're actually in late stage talks on POCs with a couple companies here.
Okay, thank you so much. Next question.
Really, can you talk about your clients, about revenue? What do you have today?
Yeah, so I mean, we're still very early stage. We just closed our seed, and we've just gotten our first payment from our Japanese client. And this is essentially a one-time payment. I can't really disclose the details of it, obviously, because it's under contract. But the way it's structured is we have a one-time integration and development where we do some customization for them in integration side. But then we have recurring revenue for access to the system on a license basis, as well as the 20% sort of commission on data transacted through the system.
Thank you so much. So next question, please.
Hi, Makoto. I have a question. From what you've explained and from what I've understood, this is a more structured way for us to voluntarily share our information with organizations, right?
Yes.
So if this plays out the way you imagine it to play out, how do you see the current practice, like what's happening with Facebook and the leakages that we're seeing? How does that automatically stop? I mean, how does that then become discouraged?
Yeah, so essentially, I mean, conceptually, you have to understand that, people have been accustomed to just sharing their data to get access to services, right? So they really feel, okay, it's kind of a network effect where you have this scenario where in order to get into a network where other individuals are participating, of course, you have to come in and sort of be active in that environment. But in reality, Facebook is monetizing that data greatly. And essentially what we're looking to do is sort of turn that on its head to where we're enabling individuals to take their own data and essentially get access to very bespoke services or very bespoke deals based on that access. And I wasn't able to really get into Service X in this, unfortunately, but essentially Service X is a mechanism and actually is a product that we've developed that enables two entities actually to get a type of anonymous insight into each other's data. And so what they do is they can say, okay, if you have a user that meets this certain threshold or this certain criteria, and it's a synergistic thing. So for example, if you have consumer credit and an insurance company, if they take a loan to buy a motorbike, for example, well then, they're prime candidate for insurance. But the thing is that the consumer credit company has already taken that user through KYC. They've already done certain types of analytics on them from a risk perspective. And essentially through our system, they can share that information fully permissioned by the user, and the user benefits greatly because they get better premiums on their insurance, for example.
Thank you so much. Next question, please.
Hi, Makauta. Hey, how are you? Great pitch. So just question is, who are your competitors in the area, and how different, how unique you are from them?
Sure. Yeah, I mean, we essentially have different types of competitors. There are obviously sort of companies that are looking to do universal ID, especially in the blockchain space. And I think that in the blockchain space, they're making sort of grave mistakes in that they're trying to introduce a token into the system, which obviously is putting friction. We don't have a token. We're not looking to do an ICO or anything. We're just a traditional SaaS, technology provider. And so we have a great advantage over them in that. We also have a great advantage in the fact that we have an extensible backend, and we go through a permission system where service providers will connect in and then provide their latent data in our system. So you can imagine right now, for example, that banks have to go through KYC process, and these sort of contender banks are pulling in eKYC to provide these solutions. Well, what we're seeing is eKYC itself is getting expensive. And so essentially what we have the ability to do is unlock latent existing data within companies that have already done the hard work for KYC, and they can monetize that and push that through the system. So those are kind of ways that we're competing. What I would say is, like, in the data monetization space, of course, there are very large players. For example, even Salesforce has a back-end sort of data sharing system, and through acquisitions and whatnot that they've done. But these are all they're not done with user permission in mind, right? These are all sort of just bulk data sharing systems where we're trying to put the user at the core of how their data is shared and how it's exposed.
Sorry, did I miss that? Salesforce is one of your competitors, the market leaders. Did you say that?
Well, I'm just saying that a lot of these large sort of conglomerate companies, or these big platform companies, have data sharing capabilities on the back end that they don't really advertise, but they're sort of services that they provide in conjunction with some of the analytic tools that they have.
Okay. Thank you so much. So let's continue in chat with our Q&A. So our next participant for today, Kate, please.
The next one is Neurobit Technologies. Mia.
Yes, please, welcome. And good luck.
Are you ready? I start.
Do you hear us?
Okay, maybe you are muted.
Okay.
Check.
Hello.
1 second.
Hello, do you hear us?
Hello, can you hear me?
Yes, we hear you.
Okay, excellent.
Could you make full screen, please?
Yeah.
Yeah, please.
So hello, everybody. Good evening. I'm Amir. I'm CEO and one of the co-founders of Neurobit. At Neurobit, we are making sleep apnea diagnosis fast, convenient, and affordable. Over 1 billion people across the world are suffering from a disease called sleep apnea. It's a disease where your breathing stops momentarily while you are sleeping, putting tremendous amount of stress on your body. In fact, those with severe apnea are living 20 years less compared to their healthier counterpart. This is how it's diagnosed today. It's called an in-lab sleep test. It is as inconvenient as it looks, it's cumbersome, and it's very costly. So not surprisingly, more than 80% remain undiagnosed. Now let's see how our system works. So the user or the patient goes to our site, mysleep.study, takes a free risk assessment test, and if they are found to be at risk, they order a small kit. The kit is a very simple chest patch, which they wear while they are sleeping, sync it to our mobile app, and once they wake up, a clinical report is emailed to them. And at the end of the study, they don't even have to return the device and they can keep it. Our system is not only 10x cheaper, it's 1000x more convenient and scalable. And this becomes even more important post-COVID-19 as patients are no longer preferring to going to the hospital. The magic behind all this is Z3 Score, our own proprietary cloud AI-powered sleep scoring platform. It's already clinically validated. It is a result of over 6 years of intense research and development. It's trusted by over 80 universities and research labs across the world, giving us access to unprecedented amount of very high quality sleep data. Our technology has the potential to impact a $40 billion+ market. Our clinical trials are already running at Changi General Hospital, and we have an excellent pipeline of partnerships and collaborations. We are a team of experts with deep expertise in AI, machine learning, neuroscience, sleep, and human factors. And finally, we are raising $500,000 to get our regulatory clearance and enter the market. So we are particularly looking at VCs with expertise in deep tech and health tech. So with that, I thank you for your attention and welcome any questions that you might have.
Thank you very much.
Thanks, Amir. What is your distribution strategy?
So right now, our first focus is the sleep clinics across the world, particularly in the US. So there are 5,000 to 6,000 sleep clinics out there. And right now, all the analysis is done manually by experts. So our first strategy is to take our software there and make the process automatic. So our target revenue from each sleep clinic is around $50,000 ARR. And there are 5,000 of them already out there. So in the next stage, we actually go with our chest patch and have a broader distribution channel that includes sleep labs, your GPs, dentists, and finally the third way, the bigger goal is to directly go to the consumer.
Okay, next question, please.
Amir, it's Lisa. You mentioned that your product is already certified. In which markets?
So it's not certified, it's clinically validated. So there are research papers that have shown the validity of our claims. So right now we are only working with the universities and research labs. For that sector, we don't need any regulatory clearance. So our goal is to collect as much data as we can from them. So every time someone uses it, we get some data out of it. And this data is what is allowing us to build our AI.
Okay, so it's research use only today. Are you going to go through certification or not?
Yes, that's the goal, and that's why we are raising the money.
Okay, great, thank you.
Thank you.
Hi, I was wondering about like the competition. I think I missed that slide. Do you have any competition or not at all?
I do have a slide for that. So our direct competitor will be an Israeli company called Itamar Capital. They have what we call WatchPad, which is a bulky device that you wear on your hand, but it still doesn't solve the scalability problem because the device itself is very costly, and it's basically you have to return it back. So with our system, the device itself is $150 for the patient. They take it and they continue using it as they want, or they can even throw it out if they want. So it's a completely different model and it's extremely scalable.
Sure.
Hello, well done.
Hi, Joseph.
Jacob here.
Oh, go ahead, Jacob. Sorry.
Thank you, Joseph. Do you forecast simply playing in the diagnostic space, or also the kind of preventive maintenance over the long run as well?
Diagnostic right now, but we will be in the treatment as well as improvement side, a neurofeedback side as well, because our core technology, which is basically is the ability to analyze any kind of data coming from, for example, a wearable to a clinical grade PhD device, and to extract high quality sleep information out of it. So we actually are developing technologies that will have impact in terms of treatment as well as improvement of sleep, but that comes later. So this is our primary goal as of now.
Thank you. Thank you. Sorry, Joseph.
Yeah.
Oh, no worries. It's a busy room, lots of judges. Amia, good to see you again. You probably get this a lot, but I wanted to get your more philosophical thoughts about this basic arms race that you're facing against these consumer wearable companies. Like right now, my Fitbit has an SpO2 sensor in it, in addition to looking at the PPG. So the question I have is, do you think you'll be able to get to market fast enough before you become kind of at risk of being irrelevant? And then the other question I have in your distribution strategy is, you're potentially putting out your very stakeholders out of business, and how are you reconciling that?
Well, excellent question. So let me go to the first question, which is on the consumer side, the wearable companies are coming towards the health sector, right? And where they lack is essentially the accuracy and the quality of their analysis. The hardware is actually becoming better and better. Yeah, and what is interesting is even companies like Fitbit, their access to actual high quality PhD data is actually very limited. And that is very surprising. Although they may have enormous amount of data coming from the wearables, they don't actually have ground truth that much. And that's why even today, their wearables cannot do a high quality analysis of their data. While we are developing those technologies that can work with their hardware and produce very high quality data. So we are becoming more and more relevant for these consumer companies. And we actually have received an acquisition offer from a consumer company like that. And that's why we think our technology is becoming even more relevant as consumer companies are moving towards healthcare. Coming to the second question, yes, it's true that we are essentially kind of pushing the sleep labs out of business in some sense, but it's happening whether we are there or not. The trend is there. People are moving towards home sleep test. That was a trend that was there before COVID-19, and it's going to accelerate faster. So we only want to be part of that change, basically.
Thank you so much. So guys, let's continue in chat, and we are ready to introduce you our third participant for today. Kate, introduce please.
The third one will be Ronnie, who will present GreenArc Capital.
Hi everyone.
Hello, welcome.
Able to hear me?
Yeah, we hear you. Welcome and good luck.
Thank you. Let me know if you're able to see my screen.
Yes, please. Yes.
Hi, my name is Ronnie. I'm co-founder and CEO of GreenArc Capital. We are an impact credit fintech platform based out of Singapore that connects institutional debt capital to impact investment opportunities in South and Southeast Asia. The founding team is all ex-Credit Suisse with plenty of experience in emerging market credit, and have executed $1 billion plus in impact products before setting up GreenArc. We are funded partly by the MAS FSTI program and a Silicon Valley-based VC. The problem space that we are looking at is twofold. One is the emerging market MSME financing gap, where MSMEs in emerging markets find it difficult to obtain affordable debt capital. It is also known as the missing middle problem. The second problem is the consumer lending gap, similar to the MSME problem. Consumers in emerging markets find it difficult to find affordable financing. Now, on the other side, we have institutional investors who, as we know, are increasingly interested in ESG or impact assets. as evidenced by the trillions of dollars invested in this space. Now, what has changed in the last 10 years or so is while the gap exists, there are a number of fintech lenders who have come in and brought down the cost of origination of these loans. Now, looking at the landscape, looking at it from bottom up, we have MSMEs and consumers who require hundreds to thousands of dollars in loans in emerging markets. Those are originated by what we call as the last mile fintech lenders. There are about 500 of them in the region, and we've looked at 70 of them and done a deep institutional credit diligence on 14 of these platforms. All the names over here are for illustration purposes. Now, the challenge with the current landscape, which is the bottom half of this page, is while the cost of origination has been brought down, most of these fintech platforms are equity financed by VCs. So the cost of capital is quite high. Now, what GreenArc does is we look at these loan books and aggregate these portfolios and gather both financial and impact metrics from these loan portfolios. And on the other side of our platform is accredited institutional investors who are interested in these impact assets. And through our platform, we provide the opportunity to invest in these assets, which otherwise they do not have access to. And they have the opportunity to create custom impact portfolios based on SDGs to which their family offices or their institutions are aligned to.
Thank you. Time is over. Sorry.
All right, no problem. I'll take the rest of it in the Q&A.
Yeah.
Hello, I have a question. So through the platform, you can invest as an investor. You can invest into specific companies. So you're not. GreenArc isn't investing and securitizing those disparate investments into one asset. You can choose to invest in
that's correct.
distinct underlying companies.
Yeah, yes, there are two options that we provide. One is you can create custom portfolios based on the loans that are available, or you can buy the loans directly from the platform.
Okay, thank you.
Hi, Ronnie. This is Eric from Singapore as well. Based on your MAS FSTI grant, do you require a license from MAS to conduct your platform business?
Yes, we do, and our CMS licensing is in progress.
Okay, and when did you apply that?
We applied it last month, so we should be getting it in the next 2 months or so. By the time COVID is done, we should be ready.
Okay, so it's a full CMS license that you guys are pursuing?
That's right.
Okay, all right, thank you.
Thank you. Next
Hi,
question.
Ronnie. Ronnie, can you tell us a little bit about your business model?
Yeah, hi, Celine. Yes, so being a two-sided platform, we collect revenues at both sides. There is a origination fee that we collect from the institutional investors. And as the platform matures, there will be a platform fee that we'll collect from the last mile lenders.
Thank you. Next one, please.
Thank you.
Yeah, Ronnie, this is Janet here. May I know how do your AI do the matching between the investor and the project based on parameter? And how do you control on the success part, you know, and the success fee that can go to you? Because I know many platforms, they go by subscription model, and it's very difficult to monitor based on success fee.
Sure, Janet. So we have an institutional partner who are also a partner in our FSTI application. So for institutional investors, unlike retail, the success fee is a little bit more straightforward because we onboard them one by one. So for us to monitor their transactions is very straightforward. Now, in terms of the AI itself, there are two components of it. One is which is our core IP. There's a risk engine and an impact engine. The risk engine is a all platforms talk about proprietary AI. Now, what we do, I would say, is what is standard in an institutional credit framework. It's a supervisory model that we have, which learns over time with the data that is provided by the lenders that we lend to. That is on the credit risk side. So based on that, our risk engine will be able to understand whether the models will be able to predict how good the efficacy of the more underlying platforms. That's on the risk side. On the impact side, that's more of a recommendation. The AI is more of a recommendation where based on the sort of activities that investors look at and similar profiles of investors, we can predict what asset classes or what products they could look at, and vice versa, where based on investors' preferences, we can guide the lenders to originate more assets of interest to investors.
How big is the data you have trial run?
Sorry, I didn't get that.
Because as far as I know, to implement an AI, you need a big data behind, right?
Yes.
To gather this
understood. So the data that we have a partnership with academic institutions. So we have 30 years of credit data that we are working with.
I see. Okay, thank you.
Ronnie, just two questions. What is your first 24 months of geographic penetration that you would like to achieve in terms of users and investors? And then second question is, does NPL play a part in terms of risk for you guys?
Yeah, so on the first question, our focus is on South and Southeast Asia. South is primarily India, and Southeast Asia are the markets that we've been focused on are Philippines, Indonesia, and Cambodia. Beyond 2 years, lots of things change. So ideally, this is scalable, but it needs to have a geographical presence, and we do have expertise and contacts in the region. That's why we are focused on this space. Now, on NPLs, there is a pilot that we had scheduled pre-COVID, but luck or otherwise, we did not proceed with it. So looking at the lenders and their books currently, we do see a lot of defaults coming. And we do see in the next couple of months or a quarter, we will have a good idea of where it stays, which also will provide a lot of opportunities in terms of better priced assets. So we do expect post-COVID, we will be in a good space to kick off.
Okay, thank you.
Thank you so much. Thank you. So guys, let's continue in chat. And Kate, introduce us, please, our next participant.
The next one will be Pocket Money, represented by Stefano.
Hi, Stefano Virgili here.
Welcome.
I'm share the presentation. Hi to all the familiar faces that I can see today. And here we go with the presentation. Are you able to see my presentation on screen?
Yes.
Yes.
Perfect. Okay, let me start my timer now.
Good luck, yeah.
Thank you very much. Pocket Money empowering differently banked community. Our mission is to move the credit score to another idea. A lot of fintech, with all the due respect, they got into the credit scoring concept with the wrong logic, because they apply financial institution standards to a system that doesn't work with those standards. So it's going to be very tricky to get more data, get more predictive algorithm. More AI is not going to solve the problem, our opinion. Why? Because they focus on providing access to credit, whereas for us, we make sure that the borrowers pay back, which bottom line is, if a person has 0 credit score, but they are willing to pay back and they have money to pay back, they will pay back. Whereas if someone, you have collected all the data that you want, but they don't want to pay back, they might not pay back anyway. So Raul and I have started, bootstrap the project. Raul runs a family office in Thailand. I've been doing entrepreneurship since I was 16, turning 42 this year. I lived in Africa. I lived in Singapore since 2006. I'm Italian by birth. I lived in Europe, and I lived also in the Middle East, where I lived in Oman. We have a very diverse group spreading from Europe all the way to Africa, Russia, Thailand, India. The addressable market is quite big. It's 2 billion individuals, estimated at 1.5 trillion. We decided to start from Africa because it's easier to speak English over there, especially in Uganda, which is our pilot project. We noticed that the access is usually denied to credit to borrowers for lack of employment, no financial transaction history, no credit score, and no collaterals. So we launched an ecosystem where anyone can answer polls or complete micro tasks, earn micro rewards, and then play a game with us, which is buying back their rewards while we keep them into a virtual pocket in storage for them. So very simple. We get advertisers to post poll, surveys, advertising on Pocket Money ecosystem. We share the rewards with the users, and then when the users get to $100, we pay them to give us their rewards and display a badge on their profile. They can choose to buy back their rewards, and then we give them a gold medal, or not buying back their rewards, and then in that case, they monetize their data, as simple as that. The purpose is for them to learn in a non-threatening ecosystem how to return a loan, a micro loan, and at the same time having a safety net so they don't default automatically, and the amount of money that they are playing with is not that big. We launched a wallet to facilitate this transaction, which is blockchain based, and it has been downloaded in 86 countries, currently running on 10 currencies. We also have a pilot project with UnionPay to cash out from the wallet. And finally, the reward pilot has been successfully completed with 1,000 users in Uganda. Thank you for listening.
Thank you so much. So let's start our Q&A. Dear judges, any questions?
Hello, Stefano. Yeah, I've got a question. But how do you calculate credit score for a borrower? Do you collect and analyze data from social networks? Because there are like thousands of indicators.
We don't care about the credit score. We don't care about data. We think that that's the wrong way of doing it. As I said at the beginning, the purpose of collecting data is that you are analyzing data. And with all the due respect to Tala and all these organizations that are collecting data, you're collecting data on their past. As just now the presenter said, there are going to be plenty of default coming up. You know what you get to read from the data is the past of that person. You can read 5 years of Facebook, and if they have interacted with 25 friends, then they have 9% higher likelihood to pay back. But eventually, if they are in emergency today, because they broke the bike today, they can't go to work today, then they ask for a loan today, not in the past. And so the data are always giving a picture that is not accurate, not current. Secondly, the credit score is completely meaningless. It's just here in Singapore itself, they will tell you, hey, apply for 5 different credit cards and then pay back $1 every month on a $1 that you spent, and your credit score will fly. There are ways around credit score. Everyone has figured it out all the way from Botswana to Singapore. So credit score, in our opinion, is not so important, but gamifying the platform, keeping track of all these transactions. And they reminded a person to get to $100 worth of rewards. They've been with us for about 2 months. We got users that are using the platform for 8 hours in a row just to generate 30 cents at a time, get all the way to $100 and being able to be called credit worth. Whether the person wants to pay back or doesn't want to pay back, it ends up to will. Anyone can choose to go and rob a bank. But at least we give them an opportunity to risk taking the loan and then paying back if they want to pay back. And if they don't pay back, we have monetized on their behalf. The $100 that they take, we have already taken it from advertisers. They don't want to pay back, fair enough. They can do again, they can earn the rewards, we get their data, and they monetize the data. So I feel very much in line with the first presenter presentation, because we monetize the data, and the last presenter's presentation before May, because we are a layer in between lenders and borrowers, but without all that financial jargon that anyway the people that we are talking to, they don't understand. Some of them, they will never have a bank account. And just to put things in context, when I lived in Uganda, I was perfectly banked in Italy, in Singapore, and in Oman, but I decided not to have a bank account in Uganda. So I was unbanked. And very, very often in Africa or in emerging markets, being unbanked is a choice more than a necessity, because it's too costly, and they can still transact using their cell phones. They don't need to have a bank account.
Thank you so much. So next question, please.
I've got a
Stefano.
question.
Oh, sorry. Sorry, Stefano. I understand what you're trying to do, but how do you stop like children from coming in and just playing for hours and hours just to generate the $100? I'm trying to understand what's the main goal of your platform.
Sure. Well, the logic to, first of all, is a normal KYC platform. So in order to cash out, they have to validate their profile. If they are minors, simply they don't get the money. So even if a parent is creating an account or 3 different accounts, they are actually spreading the rewards on multiple accounts, which doesn't make much sense. The best way of doing it is just to be absolutely transparent, and also through the surveys and the polls, there will be some of them that are just not applicable to children. For instance, have you bought an insurance? This is one of the surveys that we have. In another pilot of information that we have with the Bank of Uganda, we are posting polls relative to their ability to save money, which obviously doesn't apply to children. So there are so many layers in between. To create an account, they have to have either a Facebook account or a LinkedIn account, which means that they already have declared the age, and so they can't have an account on Pocket. They can have an account on Pocket Money, but they can't earn the rewards. When they want to cash out, they have to KYC. When they answer the question, they have to be eligible within the category of age and gender and location that we define for the polls and the surveys. So children is not definitely something that's going to happen.
Okay, thank you so much. So,
Hi, Stefano. I've got a question for you very quickly.
Awesome.
So why blockchain technology? What's the advantage? Because
So it's a private blockchain. We took it from Bitcoin and then privatized, remove all the voting system. It's just a ledger. The reason why we are using this blockchain for the wallet only, so not for the rewards. We have 2 products. One is the rewards ecosystem. The other one is the wallet. It's because from the rewards, we want to release the funds to anyone that wants to cash out. And so by doing it with blockchain, we are very fast at implementing as many currencies as we want. We already tested it with gold, the Bitcoin, and then we remove it, we hide it from the current version that we find online, but we can pretty much add any currency or even make any currency at any point in time through our wallet. So it's for accountability purpose, which you know probably my stand on blockchain. I think is very valuable when you apply to financial ecosystem, very hard to implement into other industries successfully.
Is there a crypto or a token element to this by any chance?
No, not at the moment. Not at the moment. It depends who is going to invest into us. If we have an investor that comes in and say, we are in, but you have to have a token, I think probably is adding a step in between, probably not the best idea. But if someone says that that's the way to go and they have more experience than us, we are here to listen.
Okay, great. Thank you.
Thank you.
Thank you so much. So guys, let's continue in chat. And Kate, announce please next great startup of our today's startup battle. Kate? Hello?
I was muted, sorry. The next one will be with Jay, who will present ConnectUpz. I'm sorry, I'm not sure if I'm
Sure,
right.
no problem. Hi, Vijay here. It's ConnectUpz. Let me share the screen. You guys can hear me, right?
Yeah.
All right. Okay, let me. All right. I am the founder of ConnectUpz, and ConnectUpz is a platform for niche businesses to capture their customer database. So who are niche businesses? They are actually your wheelchair transport, florists, laundromats, pool cleaning companies. And this is the problem they still face till today. How to get their customers to come back, how to reach out to new customers around them, and how to collaborate with businesses or solutions in the ecosystem. And interestingly, they actually make up 70% of businesses, service or retail businesses in the industry, right? So 30% is made up of F&B and beauty, and majority of startups actually cater to solving problems there and not here. And that's where ConnectUpz comes in. It's an automated self-onboarding. It's not complex. It's very easy. And we target people who don't list on e-commerce platforms, they are either not listed or almost invisible on social media, and they still can't capture their customer database. So what about not being invisible on social media? So this is just some examples. So if you take all these companies, they are not your very popular businesses. Hence, they don't get much followers, or their last post was years ago. And with Facebook posts having a 6.4% reach based on your followers, they're basically not getting any reach at all. So it's really an opportunity for an underserved market, especially all these niche businesses. There are at least about 60 million such niche businesses on Facebook alone. And we believe we can at least corner and onboard 1 million to be a paid merchant on ConnectUpz. So currently we have over 250 merchants joining last month. And of this month haven't ended yet, we have already onboarded 300 merchants, right? The merchants are growing on a 20% month-on-month growth. We have 1,400 daily active users on the app. This includes both users and merchants. And they do provide about 450 to 500,000 app event counts. And our country of focus is really Philippines and Singapore for right now. For Singapore, we recently got announcement that we have been selected by IMDA as the solution partner to help digitize 15,000 businesses. So this will be announced very soon. And what is ConnectUpz? It's really an ecosystem platform, a B2B2C platform to capture customer database easily, to promote these businesses in a geo-fence platform so that customers who are nearby see the businesses right at the top, right? So everybody can be right at the top. And a platform at the back end that actually connects and creates an ecosystem. So what do we do? Are we e-commerce based? No, we in fact let merchants capture the database on the platform and use external solutions that is already they're using, right? So they could have a website, they could be using Calendly, and they could be already selling on Shopmatic. They list all this together on ConnectUpz, and it becomes a reward platform for them to capture the database, whereas they couldn't capture it either on Facebook or they couldn't capture it in Shopmatic. So what we are doing is also building an ecosystem where we actually connect their needs with ecosystem partners. So we provide them.
Connect in questions. Thank you, Vijay.
Sure.
3 minutes over.
All right, let me stop sharing. Okay.
Okay, thank you so much. Thank you. So we'll start our Q&A session. Dear judges.
Hi, Vijay. I have a question for you.
Yeah, Miguel.
Yeah. So, I mean, I agree with this opportunity that you've identified. I do think that there's opportunity to disrupt this space in the Philippines and in Singapore. But I mean, how are you actually onboarding these merchants? Because you've said that, you know, they have very little digital footprint. Like, how are you finding these people and how are you actually convincing them? Because from what I know, I mean, these people are super analog. And I can't imagine them, you know, easily saying, oh yeah, that's a great idea. So, I mean, how are you doing that?
So first off, me and my co-founder have 30 years experience in retail before doing this. And that's where we understand the merchant's mindset really very deep, right? And what we do is very simple. These guys already are trying to be either on Google My Business or Facebook. And we reach out to them and say, hey, look, we can actually offer you something better. And we funnel them through actually forms, right? We did a few funnels, right? Funnel them through forms. We actually got a very good 20% conversion rate. And another thing we did is we actually did list my business. So it's already listed for them to claim, right? Claim my business. And that actually had a 40% take-up rate. So we actually moving from funnels to claiming my business. And when we reach out to them and say, hey, we are now giving you actually so many businesses, so many people view your businesses as opposed to Facebook. They come in and we tell them the only thing you need to do is to claim it and leave us a review, right? So they start leaving us reviews on Google My Business. They start leaving reviews on our App Store, and our App Store ranking ASO goes up, and our downloads increase organically as well.
So what, just quick follow-up. I mean, how does that funnel look like? I mean, what does that success rate look like from when you speak with a merchant to closing? What does that percentage look like?
So we are still pre-revenue. So the conversion is still, we have 1,300 merchants right now. 100 are paying, and this is actually pre-revenue because we are not yet at the stage to start converting everybody. But the ones who do convert is because they wanted more than what is available for free. So they wanted to unlock the paid plans, right? And that's where once we hit enough of the ecosystem size, it's very easy to start converting all the merchants because we provide them such a similar to how a startup joins an accelerator. They get 5,000 credits from AWS, they get this, they get that. The same thing we are starting to offer to them once we have a sizable ecosystem and the partners that are willing to work with us to provide that solution. So it's in fact cheaper to buy the membership than to join all this by themselves.
Thank you.
And get the value.
Vijay, can you please quantify the value that these merchants are able to receive because of your platform?
So, so I couldn't get through to some of the slides, but what they could get is actually things that they are already looking for. So like finance, right? Getting discounts from accounting companies, marketing companies. So startups, usually we are going after the startups to work with, and they are looking for customer acquisition. So we do earn revenue from actually connecting the businesses to these startups or solution providers, because everybody is looking for a client. So they are looking at, like example, a marketing company is offering X dollar value to whoever business are onboarded with them. And we also earn a small revenue share from that B2B connection as well.
Are you Groupon for SMEs?
No. So we are not gonna, how we do the platform is the merchants actually create their own loyalty and rewards program. So it's very customized. It's for from the merchants to their customers. And for businesses, it's more of a connect service. So you can think of it more like a virtual business association where they buy a membership in and they get the value of so much more than what actual physical business associations give to them. And we also make a revenue from the connections. So it's like when they buy into the membership, they get X value from this startups in terms of marketing or whatever. And when they want things like finance and we link them up, it goes through. We do have success fee. So we did that recently during COVID, and we got a few clients for that conversions as well.
Okay, thank you so much for so positive and great pitch. So let's continue, guys, in our chat. And Kate, please introduce our next participants.
The next one is Pentaip.
Yeah, hi.
Yeah.
Yes, please.
Yeah, okay, so let me share the screen.
Yeah.
Yeah, so is everyone able to see the screen?
Yeah, welcome,
yeah.
and
Okay.
good luck.
Thank you. So good afternoon, I'm Yong from Pentaip. Pentaip product is related to everyone when it comes to investment. So the biggest problem in the investment is difficult. But no one think investment is easy, but everyone need investment to grow their wealth. So the key point is investment is not easy, but needed. So can AI technology help people on this? The answer is yes. So that's why we are here introducing the robo-advisor social exchange. We will start from 300,000 robo-advisor, and each robot are specialized in different field. And our robot technology are equity based, and each robot are unique. So example, when you want to invest in technology, you can find technology robot. When you want to invest in US market, you can find US market robot. So this is the place that certified people investment need, and most importantly, there's no minimum deposit requirement. So how it works is actually very simple. It's only 3 simple steps. First, you will download the apps. Second, you deposit your money. And third, you choose a robot. Then it will start running fully automated. If you like to choose more than one robot or any number of robots, just do it. So the revenue model is extremely typical fund management model. When user assign a robot to manage, let's say $100, we charge $1. And then when the robot make money for user, we take profit sharing. So compared with a typical hedge fund model, we are cheaper, high tech, no entry barrier, and fully automated by AI. So currently we are in the seed stage, and StashAway from Singapore is 4 years old, and Betterment and Sophie from United States is more than 9 years old, and we will slowly get there. We look forward to acquire 10,000 subscribers by 2021. And the team behind the company is a team of 12 people with different field expertise. And Dr. Kwa, PhD in blockchain, is our CTO. And GreenPro is our main partner and first institution investor. They are a Nasdaq listed company based in Hong Kong with 9 financial licenses under Hong Kong regulation. Our partnership is a finance plus technology partnership to launch the Robo-Advisor Social Exchange together. They will take care of compliance, we will take care of technology. And I'm Yong, a serial entrepreneur, one of Synergy founding team. The company now worth 70 million ringgit Malaysia valuation as of today. And this is my second startup. I'm the founder, and the AI technology, the AI technology is all built in-house. And I have a 10-year experience in investment, 9 years experience in technology, 5 years experience in quantitative, and 3 years experience in fintech industry. So this company start with a founder fund, and then we targeted to raise maximum $800,000 maximum in seed stage with $7 million post valuation. And then we are going to launch our ECL platform in Crowd Plus of Asia. And a short summary is invest on us is invest in the future of wealth management. And when people open their mobile and think about investment, they will think about Pentaip, a robo-advisor that have all unique investment robot to serve the people. If you want to be our first round investor, please contact us. Thank you.
Thank you very much, Ning.
So I stop sharing the screen now.
Yeah.
Hi, Yong. I have a couple of questions. My first question is, you said that each of your robo-advisor is based on an industry. Is that right? Like technology, for example. But the first question I have is, what about our risk appetite? I may be interested in technology, but my risk appetite within technology could be different from different people. And my second question is, have you backtested to see how your robo-advisors performed with the latest crash in the market as compared to your competitors?
Okay, so the first question is the type of the robo. So the robo will cover the conservative style, trend following style, all kind of different investment style, include the conservative and the aggressive. So that's why we have 300,000 because including the investment style and different mandate. And then the second question is about backtest. Yes, I have 5 years experience in quantitative, so backtest is the most basic thing. But actually, I would say our technology is not only backtest, it also includes self-improving. So because it's an AI technology, so it's unlike the past time, the pure quantitative backtest. It's different technology already. Yeah. Thank you.
So how was your performance with the technology you have? How did your robo-advisors perform versus your competitors?
Okay, we have 300,000 robo-advisor, which trained from 23 million seed, and so far we already trained 3,000, and so far it's outperformed the benchmark.
Okay, thank you.
Thank you.
Who's next? Jeanette, maybe you have some questions?
So the judges, don't be shy, we are waiting for questions.
I have a question.
Yes, please.
Hello, hi.
I mean, I'm just curious, like, why the need for so many different robo-advisors, right? Like, why do you need 300,000? Like, what I've seen normally, I mean, a lot of people try to do this, right? Like, it's a very competitive market. And what I've seen is they specialize on one particular asset class. Like, why do you want to be everything to everybody? Like, I mean, and is that really like the proper strategy to take in this space, which is so competitive?
I think so, because 1,000 trader or 1,000 investor, there's 1,000 different style. So which means that you have to offer something that is personalized. So my target is actually to offer the platform that can personalize your need. So you can ask back to yourself a question: do you engage any robo-advisor that only offer one asset class? And if not, why not?
But
most of the answer is the answer to me say because they either like it or don't like it. They don't have choice for personalized.
Yeah, well, the premise actually to me is that, like, in this space of robo-advising, like, I don't understand why they do it, right? Like, if you say that you have the technology that's superior to all the other hundreds, if not thousands of robo-advisors out there, why not do it for yourself? Like, why not raise like a hedge fund and do it for yourself? Like, I feel like if the technology is so superior, is the business model really to provide access to this technology and not use it for my own trading?
My target is actually I want to serve people more than serve small group of people. I want to make the technology popular instead of just keep for high level. So I hope this can be answered. And just pure sharing, I start with a small trader. I start with my investment journey as a small trader. So I think you understand where I come from.
No, the vision is good. I definitely agree. But I think the challenge in this space is you have to convince people that your technology is superior. And when you present this, like, you have to allude to some returns that you're making or why it is that this technology is better than everything else out there. So that's just my advice.
Yeah, for fintech in investment, it's very simple. The outperform return will attract people who come. So the people who look for high risk, they can come for the high risk. The people who look for low risk, they can come for low risk.
Okay.
So Young, how much money do you need and what do you need it for?
We actually have 2 rounds of fundraising, and this round we are raising $800,000 maximum. And then the purpose of raising the money is to launch the office in the Hong Kong or Singapore, and then to able to start the trustee to collect the user fund. So it's for expansion and set up the business to go to market purpose.
Do you need to set up anything in Hong Kong or move to any location these days?
Yes, it actually related to our strategic partner. So our strategic partner, GreenArc, is based on Hong Kong, and they have 9 financial licenses there. So to able to collect the user fund, they will take care of the compliance, but we need to expand to more company to actually receive the client fund. So that's why we are fundraising to set up the things.
Okay, thank you.
Thank you.
What about the asset class? How many asset class can your robot advise? It's only on
equities first.
Equity, that's all.
First. Because in the first stage, I don't want to make it complicated, including crypto, but we will slowly get there. So the first stage, only equity.
So is the algorithm behind, right?
Yes. We can handle different currency, because my experience in the past exchange is my experience is I designed the core of the exchange which handle cross currency. So our robot can handle the investment robot for different currency in different country, not only one asset class.
Ning, if I could ask one non-trading question.
Yes, please.
The brains behind the algorithms, or I call it algos, comes from you, right?
Yes. So let me explain a bit of the infrastructure. Is that your question? Yeah, the infrastructure, right?
I'm not concerned about the infrastructure.
Okay.
I'm concerned about the risk. Assuming you are no longer around, all the brains are gone. So what happens to the robo-advisor? Okay.
Basically, I already hand over the whole architecture to all the team. So which means that our CTO, our backup CTO, they all know the structure already.
Oh, those are technology related, but I'm talking about the algorithms behind the trading.
The algorithm behind the trading, frankly speaking, it will be better than me just within 1 year, because it's machine learning, every day improve. Let's say when we launch at Q4, when you come to visit, the robot that you choose maybe already go through 3 million training, and second day when you come in, is 3,000,001 training, and 1 more week you come in is 3,000,010 training. So the robot actually will better than my return within a year. Now it's already almost beat me already.
Okay. Thank you.
Thank you.
Okay,
thank you so much. So, yeah, let's continue in chat. And
can I add a summary for in case there's some tech people who want to know something? Just 1 word. Yes. Just for the people who are concerned about tech, our architecture is similar with AlphaGo, the deep learning AlphaGo architecture. Thank you.
Thank you so much. Thank you. And Kate, announce please our next participant.
The next one will be Toby with the Stayr.
Toby, welcome.
An hourly booking platform, as I understood. Toby, I unmute you.
Share my screen here.
Yes.
Okay. I'm just gonna start now.
Yes.
So hi guys, my name is Toby, and I'm the founder of Stayr. We are an app company that allows you to book hotels by the hour. We realized there was a problem in the market in the past 5 years, there are at least 30 to 50% of the rooms left empty during the day. So we developed a system that allows hotels to accept real-time bookings at any time of the day, providing them with additional revenues for rooms that don't sell. So the key here is that hotels own a physical asset of 365 days a year, and they need to maximize revenue for every square meter of it and every 24 hours a day. What we are essentially doing here is to maximize revenue by utilizing unused assets. In this instance, it's space. And there is no need to change their operations because it's an empty room in the first place. Hence why their management and their housekeeping will not be affected. Now, many of you might ask, wouldn't such a short stay be too much of an indulgence? Well, the truth is, the ability to spend a few hours in the comfort of a hotel room rather than having to find a seat in a busy public area has proven preferably to many. For instance, a room at a 3-star hotel might cost $120 for one night, but only $30 for 2 hours stay on Stayr, because these stays typically provide the same comfort of a traditional stay, but for a fraction of the price. Sometimes even with additional perks like gyms and spas. Hotels offering micro stays are the perfect place to enjoy a couple of hours, especially when you're a jet-lagged business person. With Stayr, hotels can now sell unused space while travelers can rest and get refreshed without committing to an overnight stay. This allows users to book a room for less than a typical stay of 24 hours. Most hotels that have onboarded with us offer stays for as little as 2 hours. So we provide our service to a wide range of markets, from businessmen who wants to hold a meeting to teenagers and backpackers. We are excited to see where Stayr will go with huge markets around the region, and we certainly hope that you will be with us too. Thank you.
Thank you,
Thank you so much. So let's start Q&A, dear judges.
Hello, I have a question. Jake Booker here. Just a question surrounding the opportunity cost of implementation. You say housekeeping won't be impacted, but if I book for 2 hours, that's another room to clean thereafter. And my understanding was cleaners in this instance work in waves, and this would disrupt it. So what is the opportunity cost of enabling these micro stays? Do the hotels net positive, and what validation do you have of this?
You're saying that the hotels, would there be any additional operation costs for them to actually do more of the housekeepings from these minor bookings, right? So actually, with that particular room, right, in the first place, it's they're not making any revenue off of it. And if we are allocating more stays for that particular room, right, throughout just one stay per day, right, essentially at the end of the day, right, we are helping the hotels to actually generate a lot more than their revenue, which one stay would give them. And their operational housekeepers, right, are always there on standby for that particular room, no matter what. Yeah.
Okay, thank you.
Yeah, this is Ian here. I'm running a travel-related company, so I guess I'm just gonna build on the questions from the previous judge as well. I think there are certain elements that I guess was raised about increasing operations. I'm trying to understand, is there any kind of plugins that you're building with, I guess, property management systems? Also, how do you kind of account for opportunity cost of, say, a guest that has booked 2 hours versus a potential walk-in guest that might be staying the whole night? And I think increased operations in terms of like checking the person in as well as cleaning the rooms are all need to be justified, I guess. Even though you have an additional cleaner, it doesn't mean that they are absolutely free in that sense. I think that was the question I was trying to raise. I think the other question I had was, how are you looking to adopt these hotels to be using your system and managing an additional platform to justify like the increase in revenue to them? So yeah, what are your go-to-market strategies for these businesses?
Okay, so I think there's quite a few separate questions there, so I'll just answer one by one. So first of all, to answer the first question, basically the fundamental rule here is that basically there will be zero cost because they are losing out money from people doing nothing in the first place. And when we talk about more of like the specific operational stuff, right, where we are looking at essentially, we have this whole integrated system whereby they just have to sell their last minute rooms on our platform, which are essentially empty in the first place. And we do not require the hotels to give us any allotments. We need to say that they do not need to, or, tell us, oh, we need to give 10%, 20% of the rooms available for Stayr platform. They have the ability to switch on and off their rooms listing on our platform as of whenever they like it. And so in the sense that we are not really creating any operational hazards for them, but more of like a really gelling into their operational system instead. And so for checking in and out, right, we are automating the entire checking in system whereby users will be basically just scanning for a QR code when they check in, and everything will be streamlined and processed on our app itself. And we keep track of users, their duration time slots, and we create dynamic pricing for all the users who wants to book a room right now or scheduled for later. So in the sense that, if you compare us with a lot of the traditional booking platforms like Agoda, Booking.coms, theirs is mainly based on scheduled bookings rather than book now, where everything is prefixed. Hotels have to, come up with allotments, how many rooms being cleared and, on standby for Booking.com or Agoda. But for us, you can almost think of us like a Uber driver or Grab driver, whereby they switch on the app and they can just start getting riders. And that's how we are different from traditional booking platforms. So in terms of strategic plans, right, how we are planning to move forward is that basically we are trying to gather more hotels at the moment. So we are looking at big hotels and small hotel chains as well. So right now, after we going out to the hotels and getting partnerships, there has been a lot of interests, and many of them, express interest on coming on board. We have got big chains and small chains as well. But the general industry of the hotel, right, is sort of changing, and even the big brands, brands like Escort, brands like Utel, they are all open to ideas of micro stay, because there is definitely a trend towards consumers, right, that wanting to have more flexibility in terms of their stay. Yeah.
Toby, I have a question. I've just spent the last few weeks bailing out all of our travel industry founders, and no one had enough money in reserves for that. What's your monthly burn rate, and how long do you have until you literally are selling off your tech team?
Okay, so yeah, so we are actually quite an early stage startup. I'm not gonna lie. So we just launched this year, and so basically we're trying to go to launch, commercial launch in June, where because we're in Singapore and we have these circuit breaker measures kicked in right at the moment, and none of the people are allowed to travel. And so after the circuit breaker has been lifted, we will launch commercially. And so we have got, right now we have got all the hotels getting ready with us, on board with us. We're coming out with their pricing, more attractive rates than the regular Booking.coms that they offer, as well as creating more dynamic pricing, whether if there's a surge, whether there is a demand, there's a spike. So all of these are actually in talks with a lot of hotels. And so in terms of burn rate, right now we are trying to work within our means. We're going for our pre-seed round. And in terms of expansion, it will be mainly focused on the BD team, the business development team, as well as more of the R&D. But we do have in-house technical team. My co-founders, they're all technical founders. So our technical aspects of it is actually relatively strong in that sense. Right.
And are you being backed by Singapore Tourism Board in terms of financial support in the meantime?
Yeah, so we are in talks with the tourism board. So probably we're gonna go there, but we just started talking to them, last month. I just reached out to them, so they have got quite a few requests. But yes, we are definitely looking to tie up with the Singapore Tourism Board. As we've known, currently right now, a lot of the hotel industry are being affected. In fact, one of them actually closed down. One of the hotels actually closed down. So they are really looking for additional revenues to tap on to actually gain more revenues. Yeah.
Is your application ready? Either Android, I can't download it. It seems like it's just a website.
Yeah, so if you go to our website, right, actually it's an information page, but we have not launched commercially yet. But it is available for internal download. So if any of you guys are interested, you can request the internal download from me and I'll send it to you guys.
How much users do you have in beta then to make sure that your product is tested and chains are interested?
Yes.
If you don't have users.
Yeah, so for alpha testing, we are currently at the alpha testing stage, whereby at the end of the month, we'll be completing our beta testing. So for alpha testing, mainly from our users, we are looking at about approximately 50 users of our own friends and family, basically testing out for any bugs, as well as testing out for any partners app, as well as the users app, and system interface, checking in, checking out functions, dynamic pricing, everything in place. Right.
Okay, thank you, Toby. Let's move on. Very interesting pitch. I hope we will continue in chat. And the next one will be Stefan, who will present GuardRails.
Hi, can you hear me and see the screen?
Yeah.
Excellent.
But make it
All
full,
right.
because it's like a presenter.
1 second, sorry for that. All right, and do you see it now?
Yeah.
In full mode?
Yes, yes, yes.
All right, great. Then please start the timer now. Hi, everybody. My name is Stefan, and I'm the founder and CEO of GuardRails. The problem is that companies are actually breached left, right, and center, and an average data breach costs them close to $4 million US. But did you know that large enterprises are not the only ones affected by that? In fact, more than half of the SMEs go out of business within 6 months following such a breach. And software applications are the leading attack vector for this. Frankly, the whole cybersecurity industry exists because developers create applications. And studies show that virtually none of them are confident that their applications are secure. So no matter how you look at it, it all boils down to one thing. Applications have security bugs, and we want to get the security bugs out of the applications. I've been a professional hacker for the last 15 years, and I've experienced firsthand that there are not enough people with the right expertise, and more importantly, not the right security tools out there that help developers avoid these bugs. That's why we've created GuardRails. GuardRails is like a virtual security buddy that automatically and continuously helps developers to find, fix, and prevent security bugs in their apps. And not only do we help organizations reduce the risk of being hacked, we also help development teams be more efficient so they can focus on shipping more business value faster. Our initial go-to-market strategy has focused on leveraging GitHub, which is used by close to 3 million businesses around the globe. And GuardRails is available via B2B SaaS model. And I'm proud to announce that recently we've added support for GitLab and Bitbucket, as well as on-premise deployments, which means we are now available on the top 3 platforms and also for companies which has strict data protection requirements. This unlocks an even larger chunk of the already enormous market opportunity for us across the 2 segments of DevOps and enterprise application security. And today, we already have more than 1,000 installations, over 50 paying customers around the globe, and we haven't even spent a single dollar on marketing yet. We have grown our team by more than 3 times since end of last year, and we have always been fully remote, and that means from a work perspective, we have been largely unaffected by the ongoing pandemic. And since raising our seed round less than 3 quarters ago, we have executed against our vision and completed most of the technical aspects of it, and are making very good progress on the revenue generating aspects. We are planning on a Series A mid-2021. So if you have any outstanding experience and connections in this space that can help us achieve hypergrowth even faster, we would love to have a chat. Thank you.
Thank you so much. Thank you for great pitch. So let's start Q&A.
Oh.
Dear judges, any questions?
Are you so
Yes, I have one. What is your go-to-market strategy? How do you make sales happen?
Sorry, what's the go-to-market strategy and how do
you make revenues happen?
Okay, so we actually have a threefold approach. First of all is outbound sales. So we actually have, we're building our sales team that goes out directly to the market, looks at enterprises to close enterprise level deals. Secondly, we've started with our channel partnership, which means we're working with distributors and other resellers in different geographies that can help us actually sell GuardRails to enterprises and businesses in their areas. And thirdly, we do inbound marketing. So because we are part of the GitHub marketplace, we get a lot of eyeballs in the security category. And as such, that's why we were able, without dedicated marketing, to get actually a lot of people to test GuardRails and start becoming customers.
Hey, Stefan, where your majority of the customers are located? In what region?
Actually, right now, I would say most of them are in the States, and second most would be Europe and then Asia. But we are global, yeah.
Stefan, I noticed you didn't have a single woman on your team. Sorry.
Sorry?
I noticed you didn't have a single woman on your team. Any plans for diversity?
Oh, so yeah, please. There's definitely plans for that, but it's been quite hard, to be honest. But yeah, we're actually looking right now to start working with somebody in growth. Yeah, hopefully we can make that higher, but definitely on the forefront of our, on the forefront that we want to do this as well.
I know a ton of great women in cyber, so do call me.
I will. Thanks, Lisa.
Thank you.
Okay, thank you so much. Let's continue in chat. Dear judges, please don't forget to vote for our startups. It's very important. And in a few minutes, we will know the name of winner. So don't forget about it. Thank you. Kate, announce please our next participant.
Yeah, the next one is Taras, but I don't see him. Maybe he logged out for a while. So I think let's present SmartPeep.
Yeah, sure.
And?
Okay, let me share my screen. Can you hear me okay?
Yes.
Okay. Right, can you see my screen?
Mm-hmm.
All right, so I'll start. Okay, good afternoon, everyone. My name is Meng, and I'm the founder and CEO of SmartPeep. So we all know that global aging population has been rising very rapidly. So many elderly people end up in nursing homes because they cannot live without supervision. But these nursing homes are often short of labor, leading to a new set of elderly safety problems. And these are some of them. Undiscovered falls, missing elderly person with dementia, elderly person found dead in a swimming pool, poor care delivery, and bed sore injuries. So as a result, some nursing homes have already lost their license because they fail to achieve a certain care quality standard. And this is where we come in. At SmartPeep, we leverage AI technology to facilitate elderly monitoring. We power up existing CCTV cameras with AI to track and detect anomalies using deep learning technology. Once an anomaly is found, our system will trigger an alert automatically and produce report for further analysis. And this is how our system works. So when an elderly person falls, our system will basically notify the nurse so that the nurse can come and help. And once the nurse arrives, the notification will be dismissed automatically. Yep. So SmartPeep transforms various care settings into a safer place to live in, no matter it is at home, a retirement village, or a nursing home. So our client can actually mix and match the AI detection modules to power up their cameras with different features for different purposes. We bring values from 4 perspectives: greater elderly safety, quality nursing care, useful insights from our reports, and we save costs for our clients in terms of liability, productivity, and reputation. We adopt a B2B software as a service model where we charge a couple of $100s for software licensing per camera, per module every year. For the next 2 years, we'll be focusing on Australian and Japan B2B markets with a $100 million opportunity. Our ultimate goal will be entering the $200 billion B2C market through partnering with some home care service platforms. In 2019, we have conducted 3 paid pilot implementations, and we are expanding these implementations now. And recently, we have also partnered up with 2 Australian distributors. Our revenue this year is projected to be 10 times last year. We have a fully passionate team to make this happen, and we used to work with Microsoft Research Asia, F-Secure, Avira, JobsDB, and Autodesk. We've bagged several awards over the last 2 years, and we are extensively featured on the media. Our company vision is to enable better health, safety, and well-being for the seniors. And that's it. My name is Meng. We are from SmartPeep. Thank you.
Thank you so much. Thank you. Great pitch. So let's start our questions.
Hi, Meng.
Yes, please.
Hi, Meng. This is Celine. I have a question for you. I think it's about 4 years ago, I saw a Korean company start a pitch exactly what you are pitching. I don't remember the name of the company. So I would like to know, how different are you from your competitors? How much data have you collected to make sure that when the alert goes out, it's accurate? For example, an elderly person may yell because they either fell or they were watching a scary movie and they yelled, they got scared. So how much testing has been done to make sure that when the alerts go out, they are accurate for the nurses to respond accordingly? Thank you.
First of all, our technology is not based on sound. It's purely based on the visual. So it's the computer vision technology. So to answer your question, we've seen a lot of IoT devices aim for fall detection, for prevention, and all those things. So what we are offering here is actually a non-intrusive, a unified platform for all the safety features to come on board. So we have fall detection, fall prevention, bed sore management. We have nurse rounding, compliance efficiency. So it's all within a platform. When we speak to nursing homes, one of the questions that often raised, can you integrate your system into our existing system? So in the end, they have a lot of these kind of systems for different features to be integrated. So that's the main headache. So what we are doing is to integrate everything into one and then just sell it to them. So to answer your second part of the question on accuracy, we started in 2017. So we have spent the first 18 months actually doing pilots with our partners to actually make this accurate. So even 99.9% accuracy is not even enough for this kind of application. So if you do like 10,000 or 100,000 detections a day, so 1% could mean 100 false alarms or 1,000 false alarms. So these are obviously unacceptable. So our standard benchmark is actually make it less than 5 a day. So that is something that is acceptable for practical usage over maybe 20 to 30 cameras. So that is the benchmark that we are looking. That we are trying to achieve.
Thank you.
Thank you.
It's Lisa. Sorry. I've spent 7 years in security and surveillance in your space, and getting a willingness to pay from the nursing homes specifically for a task that the nurse is expected to do is a hard one. But in addition, one of the big issues has been around security and what chips you have in your technology. Are you using a particular embedded chip in order to achieve your algorithm accuracy? And is any of it embedded, or is it all in the cloud?
Okay, we are not deploying on the cloud because we service mainly healthcare organizations. They are very sensitive of uploading data into the cloud, especially this is the video data. So what we do is we bring in our server to power up their existing CCTV cameras with the features they need. So how we do this, actually we engage distributors on overseas, actually to do the system integration. And what we need to do is to actually to log into remote setup the whole environment to make it happen for them.
Thank you. Next question, please.
Ming, this is Eric.
Yes. Hi, Eric.
Out of curiosity, hi. Would your product or service be also extendable to childcare centers?
In terms of you see, monitoring children and monitoring elderly, they may look for different monitoring features. So currently, what our features are mainly customized for the safety for the elderly and the efficiency of the nursing care. So currently, we haven't. It's extendable. It depends on what kind of features they need to monitor the children. Yeah, that is something that we haven't looked into it yet.
Okay. All right. Thank you.
And I have a question. Why did you start it, and why Australia and Japan?
Could you come again, please?
Yes, why did you start this business, and why are you targeting Australia and Japan first?
Why do I start this business, and why do I target Australia and Japan?
Yes.
Okay, so I started this because of one of my grandma incident. Actually, she had fallen like 3 years ago, but she had like, so it's something that is really personal experience. And I have been in the AI space for about 10 years doing face recognition. I was thinking, okay, maybe I can do something to help elderly people, maybe to prevent the similar incidents in the future. So why do I target Japan and Australia? Basically, we do have some close relationship with some of partners over there. And as you know, we started out off in Malaysia and Singapore, but the market is too small. It's only good for pilots, and we only have like 20 hospitals and nursing homes in Singapore. But in Australia, there are like 2,000 over nursing homes over there. And they have a couple of thousands of hospitals over there. So it's a huge market. It's a 10 times bigger market in Australia and also in Japan. So those are where the aging population is. And we hope that our technology can actually create a larger impact over there. Yep.
Thank you so much. Any questions else?
Unfortunately,
One final question.
Oh,
Sorry,
yeah.
Meng. Final question. There's a really great opportunity right now for you in COVID social distancing enforcement. Is that something that you're exploring? And is there any opportunities for you to demonstrate that in the short term?
We had a couple of proposals for grants like social distancing, mass detection, and also contact tracing through the CCTV cameras. But all these require some time to build it and validate it with our customers. And because we only have a small team and we are currently busy automating the deployment process with our distributors in Australia, we really do not have time for that in the last 2 months. So that is something that in our pipeline, if it is validated, actually we are actually monitoring our competitors' performance on that also. Yes.
Okay.
Okay, thank you so much.
Thank you very much.
Thank you.
Unfortunately, the last startup will be missed because of technical problems. So we are ready to close the voting, but I would like to
let's
warn
give judges just a couple more minutes to finish voting.
Yeah, please put all marks. And for this time, I would like to pass the word to our CEO, Alexander Soroka, who will tell you a little bit news from our company. Yes?
Not really news, Katya. Probably we just take a short break to talk a little bit before you finish voting. So in a few minutes, we'll have a short discussion probably about a really open discussion on any topic, but for those of us who came from other continents, from Europe, from USA, maybe from other countries in Asia, we don't know really a lot about Singaporean ecosystem, so it will be nice to hear from you guys who are located in Singapore, what's going on, what are the trends today, and what's new with COVID-19. So just in a few minutes. And I would like to add that also invited you to our VC house. We're going to organize the club where VCs can exchange deals in which they are investing themselves. So if you have a deal and you are investing, you can offer to join other VCs. So this is probably will be the only strict rule. So if you are interested in this, participating in this community, please tell us about this. And Katya, Lena?
Yes, please.
Are we ready? Do we have numbers?
And just a moment.
Just 1 second.
Maybe somebody would like to tell his suggestions? Or what are your bids on the winner?
Probably will wait.
Probably some startup, I guess.
So we need to click and that's it, right?
Okay, should we start?
Yes, please. So let's start from third place, and third place goes to Credify.
Woohoo!
Yes, please. Thank you. So the second place is go to SmartPeep.
Oh.
Wonderful.
Congratulations. And the winner of our today's Unicorn Battle in Singapore is GuardRails.
Which one, Lena?
Lena, there is problem hearing you. Can you repeat once more?
Yeah, it's GuardRails.
Oh, Stefan, our congratulations.
Thank you.
GuardRails. All right.
You had a great.
Start
Thanks, everyone.
taking.
Congratulations, Stefan.
Yeah.
Thank you.
I was wondering, did anyone hear music I was hearing?
Yeah, it was.
Yeah,
but
no, I heard music as well.
yeah, it was really bad.
Oh, come on. It was not me playing. Next time I'll put on my piano.
What was it? It sounds like it was like Dallas or Falcon Crest theme song from 1980s.
Oh gosh, you know songs well. I don't know. I just got it from the internet. It's like it was just a music to underline the winner. That was it, without any names. But I wanted to make it special. Yes.
So our congratulations to the winner today.
Yeah, and let's fix this moment. Please turn on your videos, and I will make a screenshot of all of our screens.
We will share this photo in our social network with you.
Yeah, let's smile all together. Cheese. Yeah, and the second time, if somebody close her eyes or his eyes. Yeah.
You can
Great,
always put
great.
little kitty ears on us. For us to make it
That's right. Thank you very much.
Thank you, girls.
Thanks a lot.
Thank you.
Judges,
Thanks so
you've
much.
done a great job. You will see like in a minute, the results will be published on our event page. Everybody can go there. And girls, we're supposed to have also the winner of the guest voting. Do we have it?
Sorry, Anna, what have you asked?
The guests already had likes.
Ah, okay.
We are supposed to get the winner of the guest voting. We have it. And it was ConnectUpz. Got the most of the guests voting. ConnectUpz, congratulations, you were liked the most by all our online attendees.
Thanks.
That's wonderful. Alexander, so what did you want to know about the Singapore?
Really? Yeah, I'd like to know a little bit about Singaporean ecosystem and what's new today. So maybe some of the judges can tell us a little bit.
Who can start? Judges?
Yes, Please tell us. Don't be shy. We need to know all the
Sorry,
insights.
just repeat that. Sorry, repeat the question again. So I missed that. Sorry.
Michael.
So yeah, we are VCs who are located in US, Europe, or maybe other Asian countries don't know a lot about Singaporean ecosystem, venture ecosystem. And maybe you can tell a little bit about what's going on, what are the trends, what's new with this COVID issue.
I think in terms of Singapore, it's quite unique around the world in the sense that a lot of the money that you find in Southeast Asia is actually based out of Singapore, that are then invested across the region. And most of the companies that are set up, be it in like Malaysia, Philippines, Indonesia, a lot of them are actually then, the holding companies are set up in Singapore. A lot of the reason for that is just the ease of doing business, and it's got a talent pool of a large talent pool of expats. In terms of, you know, I guess early stage investing, there's still not the overall ecosystem is less than 10 years old in terms of VCs really to kind of took off back in 2011. The government heavily supported kind of seeding a lot of early stage funds, like Golden Gate, Jungle, and Open Space, and help them grow. They've now mostly moved to Series A. So I would say probably where most of the money is at the moment is sitting in the kind of in the Series A market. There's a small number and a growing number of early stage funds. And, you know, I would say a lot of the average size of the kind of Series A funds is around 100 to 150 million. In terms of COVID-19 has hit quite badly. Like with most ecosystems, the first companies that came through were mostly focused on B2C. Most of the unicorns are in that space in the region. So obviously a lot of cash burn, not huge amount of business model, you know, in terms of being revenue generating and profitable. But the growth of the region has been massive. But I think most of the companies now, a lot of the VCs are focusing on their supporting their portfolio companies. And, you know, there is a high level of uncertainty in terms of how long this is going to hit. Southeast Asia relies heavily on the tourism industry. A lot of the companies in the region are looking at this, you know, are in this space. So I think it's going to have a longer term impact because of the nature of the ecosystem here. But especially in Singapore, the government is very active in supporting the VC market here. So I think it will pull through in the long term. You know, where I work, you know, where Cocoon is, we do like deep tech and enterprise tech. So we're not seeing such an impact. Businesses still seem to be moving, and if anything, a lot of industries now are moving faster towards digitizing themselves. So it's a big opportunity for us here because a lot of there's still a lot of greenfield opportunities on the B2B and the deep tech. I think consumer side, you know, especially some of the big unicorns like Gojek, Carousel, Grab are kind of just staying afloat, but luckily they're all extremely well funded. So we'll see over the long term.
Yeah, and I'd say there's a lot of silver linings down here. We've got a lot of access to deep tech capital. It was caught up in general tech companies that's now available for deep techs because we struggled to get talent into the market. And the other issue or the opportunity for many of our health tech and med tech companies is suddenly there's ample opportunity for funding. And here that's been pretty tough for a long time. So I think also the kind of the golden triangle, Singapore to Luxembourg to Silicon Valley, is really playing a role in accessing non-dilutive government funding. Enterprise Singapore is the smartest money in my portfolio, and SG Innovate are a great supporter And we're seeing the Luxembourg government provide ample support into their ecosystem. So this is really exciting for our founders, especially in medtech, where 80% of medtech is actually imported in Southeast Asia. So we take it into Luxembourg, we pump it full of non-dilutive government funding, and then of course we bring it back. So it's actually given us many more opportunities for the long term. It's exciting days.
Thank you, Lisa.
That's great.
Yeah.
But I wanted to ask, did the deal flow change? Maybe it was not custom to do the deals over the online. Did K19 affect that? Do people consider closing the deals via online somehow?
This is a small place. We know each other quite well, I think. It's not like you're often meeting a deal for the first time. So I would say that we're already pretty well connected across this region, and we're monitoring our deal flow very actively, both online and offline.
Okay.
I think where it's been more affected is we invest in countries like Myanmar, Vietnam, and Philippines, and there's a lot less money there, and a lot of there's not so much of an ecosystem. So a lot of founders, they don't know how to pitch, and at the stage we're investing at pre-revenue or very early stage revenue companies. So the difficulty is that if they're just sending you emails and reaching out to you cold, most of the time they don't know what they don't know how to pitch, let alone what to pitch. They don't know how to pitch, and you're investing mostly in the people. So not actually getting a chance to meet them. There's very few people in their ecosystems that can help them or even invest in them. So I do think in the medium term, it is going to impact those countries which don't have that much money and that much support there. I think outside of probably Vietnam, Jakarta, and Singapore, there's not a huge amount of money in these markets actually based there.
Okay.
I'd like to just add in the sense that I come from Malaysia, but I spent the last 15 years in Dubai. I came back to Malaysia because we have this fund about 300 million, and we intend to invest in the ASEAN countries. And looking around, I think Malaysia is I would say underrepresented as far as the funding is concerned, basically because I think we are not so exposed. So people think, everybody thinks that everything happens in Singapore. Having said being globally, I think Singaporean enterprises are a little bit sanitized. They don't have that vibrancy because everything is kind of government link. Whereas I think in Malaysia, I think we have the talent, and I think our government is doing quite a lot. I think very soon we will have a big funding for actually startups, because startups are required to develop the economy moving forward. The trends I see now due to the COVID is tracking as a service, and also trust as a service, because this is what's lacking in the industry. And we are fortunate in the sense of for us ourselves, I think we are locked into to support, to develop an ecosystem, a platform based on, I think you heard of the news of the central bank digital currency. I think that's a big shift. I think it's a way of trying to decouple the payment system away from the SWIFT and have our own Asian kind of currency. And we are pleased that I think Ant Financial has taken up the flag, and we're going to put most of our blockchain and also AI companies onto the chain. What they just established recently called Ant Chain. So to give our startups the visibility and the visibility, and also the go-to-market possibility, because a lot of times people have been on the e-commerce, the Alipay, the Timor and all that. That's already global. So we'll probably go on to the dovetail our young startups onto that platform. So that's where I think that's the trend that's going, in the sense of to go to track and trace, so that people in the future can congregate again, where you can go to sports again carrying a QR code to tell whether you are healthy or whether you are asymptomatic, whether you're healthy, whether you have caught the disease. The four categories: one, those who have caught it and recovered; those who have not caught it; those that are asymptomatic; and the last are those vulnerable ones. I think that is one of the areas that we focus, and also to build trust for all the pharmaceutical products, the medical products, and all those products that had a lot of trust issue, especially during this time. So that's where I see the growth will be in the future. Thank you.
Thank you so much.
I think if I may add, you know, having set up my own company, earlier I mentioned I have 3 companies. So the first company that I set up was 6 years ago, and it's still running. It's in a financial trading arena. I think what is happening in Asia is, particularly Singapore, is the deep focus on the digital economy. And when that's a big buzzword. However, when you dissect it into the different sectors, for example, you have Stayr in the hotel space going digital. The first thing that came to my mind was, you know, competitors like Klook, right? And obviously the other one that you mentioned. They do have a series of an ecosystem built around the business model. Similarly, I think in Singapore, most of the startups that I've seen, because we are also looking at investee firms, a lot of them, okay, I would say half of them focuses on its core business without having the thought about who are their, I call it stakeholders around the ecosystem. And I think that's something that, because in Asia, we are very fragmented, right? And being fragmented means opportunity to pull in all the stakeholders within their business model. So I think what is good about Singapore is that you have, I think like what Lisa mentioned, you have Enterprise Singapore, you have the EDB, Economic Development Board, you have EDBIs, these government agencies that are ready to actually help connect the startups to the right stakeholders within their ecosystem in order to boost the, I would say, the acceleration to go to market, for example. So I think from that perspective, in fact, when I with my founders, we have one founder from China, one founder from Japan, and Singapore, and we chose, the 3 of us actually chose Singapore to establish our fund management company. And we also then pursue to obtain clearance from MAS to get a fund license, particularly because of governance. Because when we, you know, invest in firms, not with our own capital per se, we want to ensure that both sides, both the investee and the investors, actually go a long way in terms of the growth of the company. So I think that's a summary that I wanted to share.
Thank you very much.
And really today, we saw a lot of fintech and blockchain companies on this battle, and it's probably not so usual for other countries. Is it common for Singapore, and it's a little bit specialized on fintech? What would you say?
I think from Singapore perspective, if you look at, okay, first thing, we don't have any natural resources, all right, as we all know. So the government actually took the initiative to say which sector is strong in. So obviously, you know, the first thing came to mind was the financial sector. So MAS then created, as a central bank, a fintech division, which is quite rare. And the amount of funding that has gone into, which created to date the world's biggest fintech conference every year, has attracted a lot of funds, investor funds, whether it's from VCs to PEs and stuff like that, or even in angel investors. So, and it has created, it has pulled in other government agencies, for example, the Ministry of Manpower, to come up with a venture capitalist employment pass for venture caps that want, or startups that want to come into Singapore, right? So they pulled in another agency to facilitate this whole ecosystem. And then they pulled in the Ministry of Trade and Industry to come in to look at different sectors within the, not just the fintech space, but your manufacturing, your healthcare and stuff like that. So I think from that angle, the government has now entrenched a foothold into the fintech space per se. Even the big fours, the PwCs, Ernst & Young, KPMG, and Deloitte, equally have established their incubation hubs in Singapore, relating perhaps to the accounting industry. Yeah, so I think in a very broad scope, the fintech space, it's very crowded. You know, if you draw the vertical lines, I'm sure Ning Yong would understand, there are many segments of financial sectors within the fintech. Then now, I think earlier one of the judges mentioned about healthcare. The healthcare now is also picking up. You know, I have friends who are in Vertex Ventures, and they shared with me some pitch decks about healthcare startups, which is quite interesting. So I think just to add, key point is, I think there are certain pillars of focus within the Singapore startup space. And I think what we have seen in terms of the pitch today, some of them are right smack in the right sweet spot. Thank you.
Yeah, thank you, Say.
I have a question actually regarding the government role. You guys mentioned that the government plays a very active role, but in which shape and form does the government fund to some extent at the pre-seed? Does the government have programs to participate in the projects together with a private capital? What is the structure? Or this is mostly related to kind of regulatory stimulus?
Okay, I would say from a non-financial sector perspective, there are many grants available for startups. One example is you have a startup grant that matches dollar for dollar from your investors. So let's say if investors puts up 50K, the government has a grant that puts up another 50K, right? So that there are many types of grants, and these grants also aligns to different sectors. So for example, if you're from a media industry, the media ministry, IMDA, has a grant for it, right? And if you're in medical or any other industry, they will have different grants for it. And if, let's say, you incorporate your headquarters in Singapore, you could also engage a discussion with Enterprise Singapore to say, this is your business plan. How can we like to grow overseas? How can you help me? Because Enterprise Singapore has offices almost everywhere in the globe, and the local teams are there. So personally, I've dealt with people from, for example, I deal with MAS, the central bank. I've dealt with their London team to go to the London market, which they are very more than happy to connect me up, right? So that's something that you know, it's available in Singapore in terms of grants as well.
And maybe just to add to that, there's a significant upside if you're an accredited investor on their list. So for example, if you respond to their venture capital list for investment in healthcare, as an example, you can get up to 70% upside on the investment. So it's not just the dollar for dollar, but it's the reduction in risk. So you're actually seeing a lot of PE firms come down to early venture stage simply to help bolster the ecosystem and get in earlier. The other thing is, like Eric rightly said, these guys are so instrumental. We've just gone into Latin America, into Mexico, and into Brazil pre-COVID with one of our diagnostics company. ESG were there every step of the way. We had the Prime Minister signing with the Ministry of Health. I can't speak more admirably about the work that Enterprise Singapore do with our founders, and SG Innovate for that matter as well. So it's really smart money. It's not just a check that someone monitors. Last but not least, one of the things that certainly happened around COVID is just the level of social good that has been executed by our VC network and innovation community. So we have the Gratitude VC set up here. It's actively supporting those who are unemployed, early stage companies who are hiring to connect to that talent capital pool. It's actively collaborating VCs to support specific sectors, connecting startup founders to capital, helping people transition. I was talking about the travel industry. A lot of those guys are selling off their talent for this period, right, to get through the hard slog. And you're seeing VCs bandy together to support portfolios. So I think there's been a lot of positive social good executed during this time, and I'm looking forward to seeing much more of that in the new abnormal as we move to new normal.
Well, thank you very much. This is useful. We've just seen in many markets, the governments are trying to protect, kind of participate in a new economy, kind of startup, helping the new projects to start and grow. But then at some point of time, many of them are kind of still have this national idea of helping, you know, certain countries, their own country. And then at some point of time, the government participation may become sort of a hurdle to scalability when the company would kind of need to go outside of a particular country, would register, it would have to attract further capital at a bigger stage, you know, addressing different markets, kind of register at Delaware, go to the US investors. And then how do you guys deal with that, you know, with such an active government participation?
I think from a Singapore, I may be wrong, but the way that I think Singapore works is that the government don't actually get involved directly. They would appoint certified venture caps or PE firms to actually invest into those startups, and they would do their own due diligence, you know, discussion with the startups to see if they are the right fit to invest in. So for example, Singapore, for example, SG Innovate, perhaps is one of the agencies that, and I have some friends who are also representing other certified agencies from Singapore that actually receives the funds from the government. And they are nominated or appointed to actually strategically invest in different sectors and different startups. So that helps to elevate the political landscape of the government being hands-on with them.
But to your question, Roman, and I think it's an excellent one. I mean, if I take a healthcare company out of Singapore and throw it in the Valley, I get a 70% uplift cross-border arbitrage, right? So of course, I don't want to raise my money here. I want to go to the US. And in order to do that, of course, we also need to get through FDA, which is highly expensive. And we need to do that while retaining our IP in Singapore, right? Because often that technology is founded in Singapore. And I think the government are very supportive of that. They acknowledge that if we stay here, we die. So they're absolutely facilitative. They've set up reverse soft landing zones around the world. They're on the ground in 36 countries actively helping, but they also have kind of collaborations with innovation ecosystems, such as 500 Startups, Plug and Play, UC Berkeley, et cetera, so that we can soft land our founders and actually ensure that they have a relatively friction-free process in getting to that growth stage. So yeah, I'm Australian by nationality and I live in Singapore for a reason. I work with the Canadian government, with the Australian government, with the Luxembourg government. There's no other government in the world that is as active and as supportive as I've experienced here in Singapore. And it's a great pleasure to be a part of this ecosystem, but also to be a facilitator and that cross-border connector between here and those other growth markets, because I think we can't do it by ourselves, right? It has to go cross-border for us to get the growth outcomes.
Exactly, because the market is just not sufficient for the global scale in.
Exactly.
Yeah. Okay. Thank you.
Okay, Anna, probably we had a great discussion and really interesting.
Yes, it's good. Yeah, to take a peek into Singapore, and we planned it all offline, but I'm glad we did it online, because this way we could invite many more people to come with us, right?
Next time, yeah, we'll fly to Singapore.
Yes. And of course, we're inviting everyone to come with us. Next one is Malaysian event, right, girls? But we are going to have a series of US events pretty recently, and we are. What is that? New York is by the end of this month, and then we're going to Brazil at the beginning of June. So everybody is welcome to go with us all over the world, and we would like to see everyone, because yes, as you said, startups is it's something without borders, something that is global. So, and we are helping each other to become really global.
Seems for me, Anna, sooner or later will be a virtual travel agency for VCs.
It's a good idea, Alexander. It's not, yes, if you're spending 10 hours in a plane, it's better to chat with somebody that you have an advantage of, to chat with, right?
Let's go to Brazil with that, guys.
Now.
Exactly.
Okay.
Well, yes, thank you, everyone. Kate, Lena?
Yes,
your last word.
I want to say special thanks to our dear judges for being with us today and still positive and healthy, and join us to our next events. And I want to remember that our next event, it will be this Friday, May 22, same time, and we are inviting you, and today or tomorrow we will send you special mails with invitations, and we'll be happy to see you again. We prepare for you special startups, future unicorns we hope, and we'll be very happy